Nvidia just crushed earnings again. The Fed is openly split. Trump ramped up pressure on Powell, and the S&P 500 finally snapped its four-day losing streak. This is Market Close Daily for Wednesday, November 19th, 2025. Let's get into it. Closing bell recap. U.S. equities posted a modest recovery today. The S&P 500 finished up around 0.4%. The Dow inched higher by roughly 0.1%, and the Nasdaq outperformed with gains of more than 0.5%. Volatility cooled, with the VIX slipping into the mid-20s as traders cautiously stepped back into large-cap growth ahead of Nvidia's earnings. This wasn't a broad-based rally. It was selective, driven almost entirely by tech and AI. Breadth was positive, but not strong enough to signal a full market reversal, more of a pause in selling rather than a new uptrend. After several days of risk-off sentiment tied to data delays and policy uncertainty, today was a reset. Macro and the Fed. The macro backdrop remains cloudy. Today's Fed minutes showed a central bank that is still divided. Some policymakers believe recent softness in the labor market warrants another rate cut next month, while others insist inflation progress is not sufficient. Markets now price only moderate odds of a December cut, far lower than just a few weeks ago. Complicating matters, President Trump again criticized Jerome Powell today, calling him unfit and demanding sharper rate cuts. He also repeated his intention to replace Powell when his term expires. While political attacks don't directly dictate policy, they add a layer of uncertainty that traders must factor in, especially with a split Fed. Recent speeches from Fed officials haven't cleared things up either. Governor Christopher Waller has argued for continued rate cuts due to cooling hiring, while others stress caution. Powell reiterated that the shutdown disrupted data makes the Fed more dependent on alternative indicators. Bottom line, the Fed is not unified, and markets feel that uncertainty. AI, BIGTECH, and EARNINGS. Now to the biggest story of the day, NVIDIA. After the bell, NVIDIA reported fiscal third-quarter revenue of around $57 billion, up more than 60% year-over-year. Data center revenue surged to roughly $51 billion, confirming that demand for AI compute remains extremely strong. Adjusted earnings per share came in ahead of estimates, and guidance for next quarter also topped expectations. During regular trading, Nvidia was already up a few percent. After the report, the stock jumped again in after-hours trading, pulling futures for AMD, Broadcom, and Taiwan Semi higher as well. For now, the AI boom is slowing narrative is taking a back seat, at least for another quarter. Alphabet also continued its strong run. The stock has been hitting new highs all week after Berkshire Hathaway disclosed a multi-billion-dollar stake. With Google rolling out its Gemini 3 model more broadly, the company remains one of the strongest mega-cap performers of the month. Unlike some AI peers, Alphabet continues to attract steady institutional flows. Sector Roundup. Tech led the market today. The S&P tech sector gained nearly a full percent, and communication services, boosted by Alphabet, also outperformed. This was a growth-led bounce, not a defensive rally. Energy struggled again. Crude oil traded under $60 a barrel at points during the day, pressured by ongoing oversupply concerns and fresh headlines hinting at possible progress toward a Ukraine ceasefire. Energy stocks tried to rebound intraday, but ultimately lagged the broader market. Utilities and consumer staples names saw mixed action, some defensive bids, but not enough to lead. The takeaway: this was a tactical rebound in growth, not a wholesale shift to risk on across the board. S&P 500, gainers and losers within the S&P 500. Several standout gainers emerged. Applied Materials climbed more than 4%. Broadcom gained over 4%, and names like IDEX Laboratories and KLA moved meaningfully higher. Chip equipment and semiconductor-adjacent stocks were strong throughout the day as traders positioned ahead of Nvidia's print. On the downside, some high-quality healthcare names saw pressure. Regeneron and Vertex each dropped around 3%. Supermicro Computer, one of the more volatile AI hardware names, also fell more than 3% as some traders trimmed positions in crowded high-beta names. Deeper cuts and names to watch. For traders, Robinhood is worth monitoring. The stock added roughly 3% today, fueled by ongoing strength in retail trading and elevated crypto and options activity. If Nvidia's earnings keep risk appetite elevated, Robinhood tends to act as a leveraged sentiment indicator, but it will also be quick to reverse if volatility returns. For long-term investors, Constellation Energy continues to stand out. The company recently secured a $1 billion federal loan to restart the 3 Mile Island nuclear facility under the new Clean Energy Center initiative. It also signed a long-term power agreement with Microsoft to support AI-driven data centers. This ties traditional energy infrastructure directly into the AI expansion narrative. Crypto and metals check. In crypto, Bitcoin slipped again and traded near 91,000 into the evening session. This marks another leg in the ongoing pullback from last week's highs above 95,000. Analysts still expect support in the mid-80,000 range if selling continues. Gold held steady around $4,080 to $4,100 an ounce, continuing to act as a macro hedge. Oil was choppy, but generally weaker, hovering under the $60 mark. Together, this mix suggests a market that is cautious on growth, but not signaling full-scale risk aversion. Smart money and structural moves. Smart money flows still show selective positioning rather than broad risk-off behavior. Berkshire's new stake in Alphabet remains a headline driver, reinforcing confidence in Google's long-term AI strategy. Meanwhile, client flow from major banks shows ongoing rotation out of speculative tech and into more stable cash flow names. Institutional money continues to move quietly into infrastructure tied to AI, especially energy, grid upgrades, and nuclear restarts. These long-dated projects are becoming an under-the-surface way to invest in the AI theme, without relying solely on high-beta semiconductors and cloud stocks. What to watch tomorrow? Tomorrow, Thursday, November 20th, is one of the biggest data days of the month. Before the open, Walmart reports earnings, giving a crucial read on consumer health, grocery inflation, and discretionary spending. For many traders, Walmart's results matter almost as much as Nvidia's. On the macro front, we finally get the delayed jobs report, along with unemployment, building permits, Philly Fed manufacturing, existing home sales, and weekly jobless claims. With the Fed split and data distorted by the shutdown, these numbers could swing expectations for the December meeting. We'll also be watching whether Nvidia's strong earnings spark follow-through buying or if the market takes profits into strength. Semi-leadership tomorrow will tell us a lot about risk appetite heading into the final stretch of November. That's your Market Close Daily for Wednesday, November 19th, 2025. We covered the rebound in tech, Nvidia's massive earnings beat, the ongoing Fed divide, sector rotations, big movers in the S&P, and tomorrow's critical data and earnings slate. Thanks for listening. Be sure to tune in tomorrow. It's going to be a major day for markets. Manage your risk, stay disciplined, and I'll see you after the bell.